Welcome to the Bridge Loan Walkthrough. Bridge is the most flexible program on the platform and probably the most underused. By the end of this video, you'll know exactly when to reach for Bridge instead of fix and flip, DSCR, or ground up, and you'll close more deals because of it. In one sentence, Bridge is a 12 to 24-month, interest-only loan with no renovation requirement, designed for an investor who needs short-term capital while they figure out the next move on a property. Fast close, simple underwriting, no DSCR test, the widest property eligibility list in the entire platform. Brokers default to fix and flip or DSCR for everything, and they leave a lot of bridge deals on the table. Here are the 4 scenarios where bridge is the right answer. 1. Lease up or stabilization. The borrower bought a vacant or partially occupied building and needs 12 to 24 months to lease it before refinancing into DSCR multi. DSCR multi requires 80% occupancy at closing. Bridge doesn't care. 2. The borrower bought below market and just needs cash to close fast. Maybe a wholesale deal, an estate sale, a foreclosure auction. No rehab planned, no long-term hold story yet. Bridge gets them in the door and they figure out the exit later. 3. Cash out for the next deal. Borrower owns a property free and clear, wants to pull equity out for a down payment elsewhere. They don't want a 30-year mortgage tied to that asset. They just need short-term liquidity. Bridge. 4. Transitional asset. Property is in good shape, but tenancy is in flux, comps are unclear, or the borrower is repositioning the use. They need a runway while everything settles. 3 quick disqualifiers so you don't push the wrong deal here. Renovation planned? That's fix and flip. The bridge submission flow literally hard codes the renovation answer to no renovation planned. The system isn't built to fund rehab work. Building from scratch? Ground up construction. Long-term hold qualified on rental income? Push to DSCR. Bridge isn't a permanent loan, and the exit fee makes it expensive to hold past 2 years. This is where Bridge shines. Eligible property types: single family, 2 to 4 unit, 5 to 8 unit multifamily, 9+ unit multifamily, condo, townhome, mixed use, office, retail, warehouse, self-storage, automotive, and land. That last one is unique. Bridge is the only program in the system that finances raw land. We'll come back to the land-specific rules in a moment. Loan amount: $75,000 minimum, $2 million maximum. The system will hard decline anything outside that range. Minimum credit score: 675. Loan-to-value rules, and this is where you really need to know the structure. Baseline maximum LTV is 75%. If the borrower has 0 completed prior projects, what the system calls a first-time investor, LTV caps at 65%. If the borrower is a foreign national, LTV also caps at 65%. For land specifically, LTV caps at 50%. Land deals require significantly more skin in the game. So when you're talking to a borrower about Bridge, the very first qualifying question after credit score is, how many investment property deals have you completed before this one? If they say 0, set their expectation that they're putting 35% down, not 25. Bridge handles purchase and refi differently in one important way. On a purchase, the LTV slider drives off the purchase price. On a refinance, rate and term or cash out, the LTV slider drives off the current value of the property. There's also one hard rule on refis. The loan amount cannot exceed the current value of the property. Even if the math somewhere else would allow more, this is a backstop in the engine. So make sure your borrower's value estimate is realistic. If they're expecting more than the appraisal supports, the deal will get cut down at underwrite. Term: 24 months, interest only. No principal payments during the loan. The entire balance is due at the end. Prepayment penalty? None. The borrower can pay off any time without penalty. That's intentional. Bridge is designed to be exited early, whether through a sale or a refinance into DSCR. Exit fee: 2% of the loan amount due at payoff. That's how the program is structured. No prepay penalty, but you do owe an exit fee whenever the loan terminates. The one exception is land, which has no exit fee. Borrowing entity: LLC, LP, or corporation, U.S. domiciled. Personal guarantee for managing members aggregating 51% or more ownership. Same as every other program on the platform. Foreign nationals are allowed, with the LTV cap at 65% and additional documentation required. When should you pick Bridge over the other programs? Use this. Renovation planned, fix and flip. New construction, ground up. Long-term hold, residential or stabilized commercial that pencils on cash flow, DSCR, 1 to 4 or multi. Long-term hold, no DSCR story, or pure commercial, no ratio term. None of the above, short-term capital need, fast close, exit within 24 months, Bridge. Bridge is the program brokers should reach for more often than they do. It's flexible, fast, takes almost any property type, has no DSCR test, and works even for first-time investors. The trade-off is the 24-month clock and the 2% exit fee, but for the right borrower, in the right scenario, it's the program that gets the deal done. 3 things to ask every borrower before pricing a bridge deal. How many prior deals have they completed? What's the exit plan? And is this a purchase or a refi? Get those 3 and you'll price clean every time. That's Bridge. You've now seen all 4 programs. Go close some deals.